Walk into a Costco on a Saturday afternoon and you'll see something that doesn't make sense if you think about it for too long. A hot dog combo for $1.50, a whole rotisserie chicken for under $5, gas that's cheaper than the station across the street, 40-pound bags of rice, vats of olive oil, kayaks, coffins. Yes, coffins. And before any of this, before you can even touch a single item, you had to pay just to walk through the door. Most retailers would call that insane. Costco calls it a business model. Because here's the thing almost everyone gets wrong about Costco. It barely makes money on the stuff it sells. The margins on those famous deals are razor thin, sometimes nothing, sometimes negative. So if Costco isn't really making money on groceries, on electronics, on the giant tubs of mayonnaise people stack into their carts, where is all the profit coming from? The answer is the small piece of plastic in your wallet. Costco doesn't sell you products. Costco sells you the feeling of being smart enough to be allowed to buy them. To understand why this works, you have to forget what you think a store is. Traditional retail runs on a simple equation. Buy something for $1, sell it for $2, pocket the difference. The whole game is markup. The cleverer the merchant, the bigger the gap between cost and price, and the higher the profit. That's been the basic logic of retail for centuries. From open-air markets, to department stores, to your local grocery chain. Costco runs the opposite play. The margins are deliberately kept low. The product selection is deliberately kept narrow, often just a few thousand items compared to the tens of thousands at a typical supermarket. The buildings are deliberately ugly. Just concrete boxes with metal shelves stacked to the ceiling. There are no fancy displays, no mood lighting, no aisles designed to seduce you. And on top of all of that, before you can buy a single thing, you have to pay an annual fee. That fee is the tell. It's the move that takes Costco out of the supermarket category entirely and turns it into something else, a club. The store is the storefront, but the real product is membership. Once you understand that, every weird thing about Costco starts to make sense. The bulk sizes, the limited brands, the strange treasure hunt vibe. None of it is about being a great place to shop. It's all about being a great place to belong. Now, here's where it gets interesting. The membership fee isn't just a cover charge, it's the entire engine. Think about what kind of revenue that fee actually is. It's paid up front before any product changes hands. It's recurring year after year. It's almost pure profit because there's no inventory cost, no shrinkage, no spoilage, and it's incredibly predictable, which is the kind of thing investors fall in love with. Once a customer pays that fee, something shifts in their head. They've already spent the money, so now they have to use it. They go more often. They spend more per visit. They tell themselves that the more they shop, the more value they extract. And from Costco's perspective, every product on the shelf has one job: not to make money. To prove that the membership was worth paying for. That's the inversion. A normal store wants every transaction to be profitable. Costco wants every transaction to make you feel like you got away with something, so you'll renew next year. The hot dog isn't lunch. It's an advertisement for the membership. The cheap rotisserie chicken isn't dinner. It's a renewal pitch in poultry form. If this sounds familiar, it should. It's the same logic as Netflix, Spotify, Amazon Prime, your gym, your subscription box. The product is just the surface. The relationship is the real thing being sold. The difference is that Costco was running this playbook decades before it had a name, which raises the obvious question: why on earth do people put up with this? Why do they happily pay $60, $100, sometimes $130 a year for the privilege of pushing a cart through a warehouse? The answer is mostly psychological, and it's surprisingly elegant. The moment you pay the fee, you become an insider. You've crossed a threshold most people haven't. Even though Costco has tens of millions of members and is about as exclusive as the Postal Service, it feels exclusive. You have a card. You're allowed in. Other people aren't. And then sunk cost kicks in. The same instinct that keeps people watching movies they hate. You paid the fee, so you'd better get your money's worth. Better drive across town instead of going to the closer store. Better buy the giant pack instead of the small one. Better come back this weekend, because you're already on the hook. And every time you find a deal, every time you spot something cheaper than you'd see anywhere else, your brain quietly logs it. That's another few dollars I just made back. The fee starts to feel less like a cost and more like an investment that keeps paying you. Shopping turns into a game. You're not a customer anymore. You're a player, and you're winning. But the psychology only works if the prices actually are low, and that's where the operations side comes in. This is the part most people never see, and it's honestly more impressive than the marketing. Start with the product selection. A typical Costco carries somewhere around 4,000 items. A regular supermarket carries 30,000 or more. That sounds like a weakness, but it's a superpower. Fewer items means each one is bought in massive quantities, which gives Costco enormous leverage with suppliers. When you're ordering pallets at a scale most retailers can't match, you set the terms. Then look at the buildings. They're warehouses, literal warehouses. Products often sit on shelves still wrapped on the original pallets they arrived on. There's no merchandising team arranging things into pretty pyramids. No costly signage, lighting is industrial. Staffing is lean. Every dollar that doesn't get spent on decoration is a dollar that can stay out of the price tag. Inventory turns over fast, which means less capital tied up in stock and less risk of products sitting around going stale. And then there's Kirkland Signature, the private label that quietly powers a huge chunk of the business. Kirkland lets Costco bypass big brand markups, control quality directly, and capture margin that would otherwise go to a manufacturer. The lesson is that Costco's low prices aren't an act of generosity or a gimmick. They're the output of a ruthlessly engineered system. The store isn't subsidizing anything. The whole machine is built to make low prices structurally possible. And yet, if it were just a well-run warehouse, it wouldn't be Costco. Plenty of companies have efficient operations. Very few have fans. Costco has fans. People plan their week around Costco trips. They have favorite items. They mourn when something gets discontinued. They make TikToks about new arrivals. They have opinions about the food court. This isn't normal retail behavior. A big part of it comes from the cultural icons the company has built up over the years. The $1.50 hot dog combo, famously unchanged in price for decades, has become a sort of religious symbol. The rotisserie chicken has its own internet following. Kirkland Signature has cult products that people genuinely prefer over name brands. And then there's the seasonal stuff, the random and slightly absurd inventory, kayaks in spring, inflatable Halloween skeletons, pianos, hot tubs, oil paintings of horses. Walking into Costco feels like a treasure hunt because you genuinely don't know what you'll find. That unpredictability is engineered. The limited selection means every product feels chosen. The rotating items create urgency. Miss it this week, it's gone. And underneath it all is something deeper than novelty. Members believe Costco is on their side, not in a sentimental way, in a structural way. They believe the company isn't trying to trick them, isn't running fake sales, isn't quietly shrinking the package while raising the price. That trust is the real cult, and it's worth more than any individual product on any shelf. Now stop for a second, because if you've been following along, you might already see a problem. If the entire business runs on members trusting that Costco is the best deal in town, then the worst thing that could happen to Costco isn't losing money on a hot dog. It's customers starting to wonder if the membership is actually worth it anymore. Low prices are the surface. Trust is the asset. And trust is fragile in a way prices aren't. You can't put trust on sale. You can't run a promotion to win it back. Once members start doing the math and feeling like they're not really saving anything, the whole flywheel slows down. So the real challenge for Costco isn't competition. It's keeping a promise that has to be reproven every single time someone walks through the door. This is where the model gets uncomfortable, because the very thing that makes Costco great is also the thing that constrains it. Cheap prices are a promise, but they're also a cage. Raise prices too aggressively and members feel betrayed. The trust erodes. Cut quality to protect margins, and the deal feeling disappears. People notice. Add too many products to grow the catalog, and you lose the operational efficiency that made the prices possible in the first place. Keep prices too low forever, and there's a hard ceiling on how much money the products themselves can ever bring in. Every move Costco wants to make pulls against another move it has to make. It has to balance price, quality, selection, the membership fee itself, the in-store experience, supplier relationships, and the cultural mystique all at the same time. Most retailers can fail at one of these and survive. Costco can't, because none of these things are really separate from each other. They all feed into the same question in the customer's head, the question that gets asked at renewal time. Is this still worth it? The genius of the model is that it aligns the company with the customer. The danger of the model is that it leaves no room to drift. Costco has to keep being Costco forever, or the whole thing unwinds. And this is the part that took me a while to fully appreciate, because it flips the obvious story on its head. Costco isn't actually the cheapest retailer in the world. It's not even always the cheapest on any given item. Walmart can match prices. Amazon can undercut on plenty of categories. Aldi runs leaner on groceries. Sam's Club exists for the express purpose of competing with Costco directly. Price, on its own, is a commodity. Anyone with enough scale can do it. What Costco has that nobody else really has is a specific kind of belief. When something shows up at Costco, members assume it's been vetted, assume it's a fair deal. Assume that someone somewhere in the supply chain looked at this product and decided it was worth carrying. That's a level of trust most retailers would kill for. And it's the actual moat. The membership amplifies it. Once you've paid the fee, you're not just a shopper anymore. You're invested. You have skin in the game. You're rooting for the place to be good, because if it's good, you're smart for joining. Costco doesn't need you to buy everything. It doesn't even need you to buy a lot. What it needs is for you to believe that every time you come back, you have a shot at winning. That belief is the product. The hot dog, the chicken, the kayak, the membership card. Those are just receipts. Step back from Costco for a minute and you start to see this same pattern showing up everywhere. Amazon Prime, Walmart Plus, paid loyalty programs from airlines, coffee chains, some sneaker brands, subscription boxes, streaming bundles. The whole industry is quietly migrating toward the same insight Costco figured out decades ago. When the margin on any individual product gets thinner and thinner, when competitors can match your prices in a click, when commoditization eats everything, the only place left to find real profit is in the long-term relationship with the customer. Selling a thing is hard. Selling access, convenience, identity, ongoing membership, that's where the durable money lives. What makes Costco unusual is that for them, this isn't an add-on. It's not a layer bolted onto a normal retail business. It is the business. The products are the front end. The membership is the engine. Most companies are now trying to build a Costco-style relationship on top of a traditional model. Costco started with the relationship and built the rest around it. That's a different kind of company. And it's the version of retail that more and more of the industry is trying, awkwardly, to imitate. When you put it all together, Costco isn't a place to buy groceries in bulk. It's a system. Membership fees that turn customers into investors, prices low enough to keep proving the membership was worth it, operations tight enough to make those prices structurally possible, a product selection narrow enough to feel curated and wide enough to feel like a treasure hunt. And underneath all of it, a brand built on the idea that the company is on your side. Products are the reason customers walk in the door. Membership is the reason the model makes money. Trust is the reason customers keep coming back. Take any one of those out, and the whole thing falls apart. Keep them all working together and you get one of the strangest, most resilient retailers ever built. Costco isn't really selling you stuff. It's selling you the ongoing feeling that being a member of Costco is one of the smartest small decisions you've ever made. And as long as that feeling holds, the warehouse doors keep swinging open. So here's the question I want to leave you with. Do you actually think Costco is a retailer? Or is it a subscription business in a really convincing costume? Drop your take in the comments, because honestly, I keep going back and forth on it. And if you want me to break down the systems behind other retail giants, IKEA, Trader Joe's, Walmart, Aldi, Amazon Prime, just tell me which one you want next. This is a series, and the next case study is whatever you put in the comments.